Hello and welcome back to Coin Lady channel. In this video, we will cover a wide range of topics. The US economy, according to Treasury Secretary Yellen, is doing extraordinarily well right now. No one can buy that. She could have said something like, well, things are looking better, things are starting to turn around, but she chose to say that things were going exceptionally well. Now. Many have accused me of pushing my political beliefs after yesterday's video, in which I discussed the Great Reset. No, I'm just bringing out political realities, and I'm also pointing out that Cbdcs have an impact on the future value of XRP because to the Great Reset. But I also don't think XRP should be associated with something so sinister. With this and a return to the gold standard, the current financial system can be quickly and simply fixed. Nevertheless, no one seems interested in improving the current setup. They're eager to start fresh in a different paradigm. They advocate for a global debt cancellation. Still, you have to face the fact that a Cbdc is the worst possible outcome. Mortgages were a money loser for U.S. institutions. She just reported that the economy is doing wonderfully, she added. Mortgage Bankers Association has gotten new statistics showing that for the first time in history, US banks have lost money on mortgages they financed. Furthermore, the survey found that both non-bank mortgage lenders and mortgage-related divisions of chartered banks lost an average of $301 per loan. Since the report's launch in 2008, this is the first time a reduction in profits has been recorded. The research also notes that rising mortgage rates in the context of a temporarily low housing supply and difficulties in affordability contributed to the average losses of 13 basis points. We're crypto investors, as you may know. Similarly, we would never buy at the peak of the real estate market. We would sit tight until it dropped again, and then we'd purchase low. Yet, the number of people purchasing a home is still at a record high. Jamie Dimon, CEO of JP Morgan Chase, has stated that the banking crisis is far from over and that its effects will be seen for years to come. I have to agree with them since I think this is only the start of something much larger. Even now, people insist that the problem was limited to those two financial institutions. There was some sort of cryptographic connection between the two. This shortcoming is fundamental to their ultimate failure. If cryptocurrency can't be blamed for the next bank failure, then what can be? The big question is that. For this reason, the IMF has issued a warning of a global banking collapse and has announced a Cbdc reset, which is what every country wants. They are working hard to establish a Cbdc. And I think what's going to happen first is that everybody holding crypto is going to get extremely affluent, but we're not going to be selling our crypto because what are you going to trade it into? US dollars. Perhaps there's a way to convert it into actual gold. Opportunities will present themselves. The fact that they are trying to prevent banks from dealing with cryptocurrency is my biggest concern. How would we get our cryptocurrencies out of the exchanges if they were shut down? Need to liquidate some cryptocurrency. What if there are no more trades available? What if the rules were altered in the middle of the game? There are a lot of unanswered questions surrounding this topic since we aren't there yet. It seems to be the main issue. We can all make educated guesses about what will happen, but nobody can say for sure. And I still have the impression that the conversations will be a part of our lives for quite some time. One of the Federal Reserve notes that Elon Musk writes claims that World of Warcraft's economy is orders of magnitude superior. We really should have done away with the Fed a long time ago. They need someone to keep creating that money, keep the money printer running, and I think that's why they don't want to get rid of the Fed. If it weren't for that, we'd have done away with the Fed a long time ago. Robert Kennedy Jr. has referred to Cbdcs as the ultimate mechanisms for societal surveillance and control in regards to Fed concerns. The concept of a Cbdc has been in the spotlight throughout this election year, and many voters might benefit from learning more about it. Those who aren't familiar with cryptography don't get it, as I mentioned in yesterday's video. Whenever I bring up the Federal Reserve in conversation, people now respond with, "Isn't that digital payment system?" They don't see the potential harm in it. And I have some thoughts. Before the next election, voters should educate themselves about a Cbdc so they can make an informed decision. Defending the Fed in this context feels strange, Yet correct information is essential when guarding against Cbdcs. Today I'll go into detail on the Federal Reserve. Fed currently does faintly resemble a wholesale CBDC, but a wholesale CBDC would only be used by financial institutions for interbank settlement, therefore it's not a CBDC. FedNo would also be unavailable to consumers outside of banks. The construction is what sets them apart. When compared to a CBDC, FedNow is more akin to a payment system. If money were water, then FedNo would be the pipes that carried it where it needed to go. In contrast, the water itself would need to be replaced in a CBDC. The virtual currency, I think, will be released at some point in the future. While FedNo is not a CBDC, this statement is not without criticism. That doesn't mean there aren't valid concerns about it. The United States could benefit from faster payment options, but FedNo isn't the only game in town. FedNo was revealed in 2019, however the clearinghouse had already been using the real-time payments network for 2 years prior to that. In fact, even without fast payments, the US financial system would have benefited from making FedWire and the National Settlement Service available 24 hours a day, 7 days a week. But it appears that the Federal Reserve has opted to bypass the easier solution and instead turn to the private sector. Those are legitimate criticisms that have been lodged against FedNo for some time, but they passed on the simpler of the two options. Keeping my guard up. FedNo is not a CBDC, but it doesn't mean skeptics of CBDCs can relax. Instead, being watchful is actively seeking out and correcting misinformation about everything from the loss of financial privacy to the destabilization of the banking system. The dangers of CBDCs cannot be overstated. That's why I indicated it's a stepping stone to a CBDC. I anticipate a smooth transition in the event of an evacuation. That's my point in the video I posted yesterday. A record amount of Russian oil is being purchased by Saudi Arabia, which then launders the money. U.S. sanctions by hiding in the European market. Traders are storing up on the fuel at the Fujairah hub in the UAE and in Saudi Arabia, according to ship tracking data. Since Russia is moving away from the US currency, it appears that Saudi Arabia is doing a lot more commerce and that they are attempting to circumvent American sanctions. That's why I predicted a sudden surge in cryptocurrency prices on the stock market when the dollar dropped. The committee has recommended that the SEC make a strong claim to jurisdiction over all crypto tokens. Now, this is something we need to discuss because, as the US dollar declines and cryptocurrency prices climb, I believe they're also utilizing the SEC to discourage new investors from entering the market. They seem determined to find any excuse to keep regular folks away from crypto. On Thursday, the Investor Advisory Committee of the U.S. Securities and Exchange Commission gave the SEC its thoughts on how to handle crypto assets. To help a securities regulator set their priorities, the Dodd-Frank Act Section 901 established the aforementioned committee. Christopher Merbeil, the IAC chair, and Leslie Bursick, vice chair, wrote to Gary Gensler, the SEC's chairman, expressing their concerns. Initially, Kirk stated that the IAC unified opinion was being submitted. To safeguard investors, they said, "We believe that almost all, if not all crypto tokens are securities and that they, as well as the performed platforms and custodians dealing with them, are susceptible to regulation under the federal securities laws." In other words, they want to keep me and you safe from crypto. They must be trying to keep inexperienced people out of the cryptocurrency market. Bitcoin, however, is currently trading at $30,000. We don't understand why it's sitting at that price. Because individuals are fleeing banks in an effort to stave off inflation. People, however, are also interested in maximizing their financial returns. They're using the SEC and whatever other means at their disposal to discourage people from investing in cryptocurrency at the moment because they realize that this is the only way for the average person to advance in their financial situation. In the end, that's all there is to it. And they're doing everything they can to keep as many people as they can from fleeing the failing financial system before it collapses and takes everyone's money with it. For those with the foresight to realize the potential of cryptocurrency at this juncture, I think the rewards might be substantial. You should enter now if at all possible. You should know that the prices of these antique coins are currently extremely low. Examine XRP. If you enter the building at this time, you may avoid a lengthy wait. Years of anticipation have culminated in this moment. Several of you probably have as well. it's the last chance you'll get. There is no hope for improvement. The situation will only worsen dramatically. What is the most effective strategy for protecting one's wealth from the devaluation of fiat currencies, precious metals, and cryptocurrency? And now that they see people opening their eyes, they're furious. People are seen flocking to Bitcoin. People are now constantly witnessing others attempting to flee the bank. In the end, that's all there is to it. Now, they plan to significantly increase the story's intensity. The SEC's crypto crackdown is also likely to be ramped up. I plan to elaborate on that in a subsequent video. But right now, everyone you know, relatives and buddies alike, needs to get into crypto while they still can, because the future is not looking positive. My prediction is that hyperinflation will hit the entire world by the end of the year. But I'm going to end this video here. I appreciate everyone who has tuned in. Please like and subscribe my channel. See you later, bye.